Welcome back to the channel, everybody. Thank you so much for joining me and allowing me to continue to be your daily advocate. If you're new here or you're not subscribed for any reason, please do me a huge favor and hit the subscribe button. Thank you to all of you who have been watching and following me for so long. It truly means a lot, and I'm glad that I can be this person.
So guys, I thought I'd switch gears today. I found this interesting tweet thread from Tag XRP. He says, "I'm going to throw something out there that we've been speculating for a long time. I think the SEC and VCs were involved in the DAO hack, the DAO hack. The DAO hack, in my opinion, makes the Ethereum whale purchases look like nothing, and I think the SEC was involved in both." So, a purely speculative thread, but it would have an impact on the Ripple SEC case if indeed the SEC was implicated in this fraud. So this thread jam-packed with evidence here that I'm going to get into, and first, if you guys don't know what that is, I'm going to give you guys a bit of a briefer here, understanding the DAO hack. Blockchain strategist David Siegel gives a step-by-step overview of the attack on the DAO for journalists and media members. So this, I believe, was written back in, 2016, so a while ago. Here are the basics. The Ethereum network is a network of computers all running on the Ethereum blockchain, as we know. Currently the most second valuable cryptocurrency behind Bitcoin. Ethereum also allows people to write and put on the network smart contracts, general purpose code that executes on every computer in the network. So just giving us a basic idea of Ethereum, for those of you guys who do not know how Ethereum works, a DAO is a decentralized autonomous organization. Its goal is to codify the rules and decision-making apparatus of an organization, eliminating the need for documents and people in governing, creating a structure with decentralized control. And so here is how it works. In essence, a group of people writes a smart contract or programs that will run the organization. There is an initial funding period in which people add funds to the DAO by purchasing tokens that represent ownership. This is called a crowd sale or an ICO. When the funding period is over, the DAO begins to operate. People then can make proposals to the DAO on how to spend the money, and the members who have bought in can vote to approve these proposals. It's important to understand that great care can be taken not to make these tokens into equity shares. They are more like contributions that give people voting rights but not ownership. In most cases, a DAO is not owned by anyone. It's just software running on the Ethereum network. The very first DAO is Bitcoin itself, which is governed by consensus among its core team and its mining network. All other DAOs have been launched on the Ethereum platform. The DAO is the name of a particular DAO, conceived of and programmed by the team behind German startup Slockit, or Slock.it, a company building smart locks and let people share their things like cars, boats, apartments in a decentralized version of Airbnb. So just to kind of give you guys a sense of the real world application on that. So we can see there was a funding period, and it was popular over a period of time, raising over $100 million by May 15th. It was the largest crowdfunding in history, having raised over $150 million for more than 11,000 enthusiastic members. The DAO raised far more money than its creators had expected. But then there were some concerns that the code was vulnerable to attack. Once the crowd sale was over, there was much discussion of first addressing the vulnerabilities before starting to fund proposals. In particular, Stephen Tual, one of the DAO's creators, announced that on June 12th, that a recursive call bug had been found in the software, but that no DAO funds were at risk. At the time, more than 50 project proposals were waiting for the DAO's token holders to vote on them. So it's important to reiterate that the Ethereum network has no such bugs and has been working perfectly the entire time, at least as of this time. All network systems are vulnerable to various kinds of attacks. The Ethereum network, which supports, depending on the price, around $1 billion worth of Ether, has not been hacked and is continuously executing many other smart contracts. So we can see the connection here, guys, with the DAO and Ethereum. I'm just going to skip down here. The DAO attack, or rather the DAO hack. Unfortunately, while programmers were working on fixing this and other problems, an unknown attacker began using this approach to start draining the DAO of Ether collected from the sale of its tokens. By June 18th, the attacker managed to drain more than 3.6 million Ether into a child DAO that was the same structure as the DAO. The price of Ether dropped at that time from over $20 to under $13. Several people made attempts to split the DAO to prevent more Ether from being taken, but they couldn't get votes necessary in such a short time. Because the designers didn't expect this much money, all the Ether was in a single address, which was a bad idea, and we believe the attacker stopped voluntarily after hearing about the fork proposal, see below. In fact, that attack or another similar one could continue at any time. And so just to elaborate on that, smart contracts are meant to be standalone agreements, not subject to interpretation by outside entities or jurisdictions. The code itself is meant to be the ultimate arbiter of the deal it represents, but of course, that's an idealist crypto-anarchist perspective. Even before the attack, several lawyers raised concerns that the DAO overstepped its crowdfunding mandate and ran afoul of securities laws in several countries. Lawyers also pointed to its creators as potentially liable for any problems that had occurred, and several expressed concerns that token holders of the DAO were accepting responsibility they were likely unaware of. The DAO exists in a gray area of law and regulation. Because the child DAO has the same structure, limitations, and vulnerabilities as the parent DAO, the Ether in the newly created child DAO can't be accessed for 28 days, as that is the initial funding period. Everyone can see the Ether in the child DAO. Any attempts to cash it in will trigger alarms and investigations. It could be that the attacker will never get to cash or spend a single Ether of it. It's entirely possible that the attacker had a large short position on Ether at the time of the attack, which he or she cashed out after Ether had been cut roughly in half. The attacker may already have made his money regardless of the Ether sitting in the child DAO. So again, this was all speculation. This was all kind of trying to get down to the bottom of it back in 2016 when that occurred. But there's more to this story, guys, and there's more to this article as well. I will link it in the description if you guys are interested in learning more about this. Tag XRP bringing more information to our attention. He thinks this could have been perpetrated by the SEC, that they could have been actually involved in this, and that maybe it could have actually benefited Ethereum whale purchasers. Let me get into some of this. So he's just screen grabbed a few news articles here. The SEC is careful to apply securities law to DAO specifically. So that's their stance on it. Since DAO is a wisdom of crowd VC fund, the answer is clearly yes. Peter Van Valkenburg of Coin Center, he said the SEC was surprisingly well acquainted and up to speed with the DAO debacle. So a little speculation on how did they know so much about it when it happened, considering how little the SEC seems to know about the cryptocurrency space, or at least lets us on to know. Anyway, Tag goes on by saying, I think the XRP community has helped us come up with some most unbelievable information of this entire mess. I have strong proof to believe that the SEC is using Ethereum for file storing, aka Filecoin. And then he asks a question to XR Pizza, do you remember some of those coded messages? There was also SAFT, if you guys remember. Follow the breadcrumbs to DAO in my next article where the SEC takes no action against Slock.it's founders. And if you guys remember, Slock.it mentioned in this article from 2016. So here's some information. The SAFT project towards a compliance token sale framework back from October of 2017. The public token sale, colloquially known as the initial coin offering, is a powerful new tool for creating decentralized communities, kickstarting network effects, incentivizing participants, providing faster liquidity to investors, and forming capital for creators. Purchases in these direct pre-sales tend to expect profits predominantly from the seller's efforts to create functionality in the token, such as these sellers may unintentionally be selling securities and may have failed to comply with several US laws. The SAFT is an investment contract. A SAFT transaction contemplates an initial sale of a SAFT by developers to accredited investors, and so the SAFT is a security. Already functional utility tokens are unlikely to pass the Howey test, so just more information regarding that. Sellers are already functional utility tokens have very strong arguments against characterization as a security. Such tokens rarely satisfy both the expectation of profits and from the efforts of others prongs of the Howey test. So to be sure, gold, silver, and sugar are different from tokens in important ways. For example, in the case of a token sale, so just giving an example, the seller may continue to improve the network and the secondary market price of the token may appreciate as a result. This characteristic is not shared by precious metals or sugar, for example. So should utility tokens really be treated similarly? For already functional utility tokens, we think so. Because there is no central authority to exert monetary policy, the secondary market price of a decentralized token system is given exclusively by supply and demand. And guys, this is a position taken by Cooley, which is a law firm. Going on here, the SEC's position. The SEC has not yet publicly spoken about utility tokens. However, on July 25, 2017, the SEC issued an investigative report on the application of the federal securities laws to the Decentralized Autonomous Organization, or DAO, and the Blockchain Token Association with it, DAO Token. It marked the SEC's first official pronouncement on token sales. So this was back in 2017. Let's not forget the timeline here. So important down here, the DAO was a smart contract on the Ethereum blockchain that operated like a venture fund. According to the SEC, the Dow organization sold Dow tokens to purchasers in exchange for Ether. The Ether was pooled, and then Dow token purchasers could vote on a menu of investment to which the Dow would apply portions of the pooled funds. The purchasers would then share in profits from the investment pro rata according to their Dow token holdings. The Dow tokens operated like limited partnership interests. They were using the terminology of this white paper, security tokens. And so Tag continues by going on. Steve Paikin does mention Ether as a cryptocurrency when mentioning the Dow fundraiser. If you guys remember that, I don't have a video clip here, but he does just show us a couple of screen grabs and raised a blockchain currency, Ether, the equivalent of 150 million in value. He goes on, the Dow hack was shady to say the least. Here's just 3 of many reasons why. The amount of Ether, 12 million, was the exact amount the Ether Foundation kept after the pre-sale. Coincidence? Number 2, orders of tokens were anonymous. And number 3, the SEC determined they were securities and didn't pursue enforcement. So here's just some background just demonstrating that Ether was raised by Dow, was valued at approximately $150 million. As per Steve Paikin's tweet up here, they allowed their customers to post orders for tokens anonymously, which sounds kind of shady. The Dow and related parties had violated the federal securities laws, and the SEC determined it would not pursue enforcement action. Continuing, a tweet Tag retweeted out from himself on September 30th, 2021. This document really is gold. It is precisely what happened when the SEC warned in July of 2017 that the Dow, an Ethereum-based investment in government's platform, had likely violated securities regulations. Dow report below. And so, here it is. This is precisely what happened when the SEC warned in July of 2017 that the Dow, an Ethereum-based investment in government's platform, had likely violated securities regulations. Contrast this with the SEC Division of Corporation Finance Director William Hinman's recent announcement that transactions in Ether are unlikely to be deemed security transactions. So a bit conflicting. Also, Jay Clayton being implicated in this. How the F was Clayton so incredibly informed that he could write a completely detailed paper on this? And so here's the paper written by Jay Clayton, published date February the 18th, Testimony on Virtual Currencies, the Oversight Role of the U.S. Security and Exchange Commission and the U.S. Commodities Futures Trading Commission, written by Jay Clayton. I'm going to keep going down because there's a lot to cover here. And so Tag, going back to his tweet here, the Dow report is one of the weirdest reports in all of this. It was the largest crowdfund campaign in history, $150 million. Jay Clayton, SEC, ultimately decided they were securities, but took no action. Guess what? No money was lost, their money. It actually made them more by creating the fork. And so I did skip over that part here, but there was the hard fork proposal. I'm not going to get into that, but you guys can read more about that in detail if you are interested in this case. So the Dow, decentralized autonomous organization, as we know, Ethereum based, and here's the timeline. Crowdfunding in 2016, over $150 million USD. An attack started to move $55 million to one account, 30% of the 12 million Ethereum valued at that time. A 34-day holding period kept the funds from being transferred. And then on this date here, July 20th, 2016, at block 1,920,000, there was a hard fork to reverse the theft, approved by a majority of the accounts in Dow's network. Good news, thanks to the fork, no one lost their money. The bad news, thanks to the fork, there are now 2 Ethereums, Ethereum and ETC, which is now Ethereum Classic. So that's a new piece of information. I did not know that Ethereum Classic was born out of that. Anyway, to continue, Tag tweeted this out on January 4th. The Dow hack had to have been done from the inside. The line of code that was vulnerable was 666. They not only didn't lose any money, they made more off of Ethereum Classic sales. And how could it be that just coincidentally the line of code that was vulnerable happened to have been 666? A clever little joke, perhaps put in there by one of the developers. Anyway, going on, check this out. 30,000 Bitcoin from the Ethereum presale was controlled by fiduciary members, and they moved to a holdings entity established in Canada that will be gradually converted into Dow. Novogratz blocked me from this, but here's just another piece of information here regarding that. I'm going to continue down here. Does anyone have access to the full document? It mentions Jay Clayton, Dow, but the page is blurred because I don't have a membership. And so here's just some more information with regards to that Jay Clayton connection. Jay Clayton, of course, at that time, head of the SEC, head chairman of the SEC. Not sure how I missed it down here, but a month before, Gavin walks away from the DAO. That's mighty interesting as well. This has to do with Gavin Wood. DAO creation was too prone to misunderstanding, so I am stepping down. And we tend to see that, right? Founders stepping down when they know that crap is going to hit the fan. So the DAO attack and others help the price of Ethereum. And so just to go back to Satoshi Nakamoto's philosophy about this, lost coins only make everyone else's coins worth slightly more. Think of it as a donation to everyone. So yeah, that's an interesting perspective to take here. Continuing on, have you seen that Vitalik had the ability to halt trading during the highly controversial DAO attack? One of their devs said they can roll back transactions as well. He would know the ins and outs of the DAO. Could he have seen the exploit, gone after it, and support the hard fork? Original Ethereum, or ETC, would be converted to current Ethereum, thus removing current Ethereum from Ethereum's ICO, since Ethereum sold during the ICO would have been securities. So another point here, posted by Conspira XRP Theorist on February the 1st. Following the breadcrumbs, I believe we read this already, or no, this was just another, or no, this was the same thing, the Slock IT founder and how they weren't questioning that. Again, guys, I will link this entire thing in the description for you if you care to read further. How about Suzanne Tarlowski? Is Suzanne Tarlowski Tempelhof the DAO hacker? Retweeted out by Stéphane Hubert on Twitter. The DAO investigation report, also tweeted out by Tag XRP. It looks like Tag XRP has been following this for a while and has been piecing this together throughout the last year or so. So again, this report from July 2017, report of investigation pursuant to Section 21 of the Securities Act. Continuing to go on, Ripple here on Twitter has been listening to a podcast about the DAO hack, and it led me to a page called DevOps, which is in this. Is it in here? Show me. No, it's not in here. I guess he has not actually linked it here. But anyway, that is the end of the thread, guys. A lot of interesting information, connections to Jay Clayton, of course, Vitalik Buterin, the fork, the fact that they could reverse Ethereum transactions, and they ended up doing so, right? Blockchains are immutable, except when they aren't. No one lost money, but now we have an Ethereum Classic token, which, I mean, for better or for worse, maybe a good trading vehicle for some of you guys. And so considering the SEC so deep inside this story, so connected, was Jay Clayton part of this? It seems like overwhelming evidence does suggest that he was. Tag XRP, of course, pointing us to a lot of these tweets from even just tweets that he posted randomly in isolation. Now he's going back, putting them together like these ones from December of 2021, September of 2021. I also saw some down here from January and February. When you put it all together, it certainly does make you scratch your head. And so will this have an implication? I mean, this could, in fact, result in a completely separate lawsuit. And so I just saw this too by BondCrypt XRP, Ethereum going to be thrown to the wolves. It's just a matter of time. I mean, the SEC has been trying to protect them, and this just another point to that. Other blockchain networks will likely surpass it sometime in the future, such as XRP, Stellar, Algorand. They're all going to be Ethereum killers because they're all going to be 20022 compliant. Just retweeting out crypto news here. Morgan Stanley is now saying that Ethereum is less decentralized. Ethereum is more volatile compared to Bitcoin. And so fast forward like 6 years now, because this happened in 2016, so many more blockchains are available that I think it is safe to say that Ethereum's model is maybe a little bit obsolete, and that it might not actually end up being one of those blockchains that ends up being part of the internet of value. But there's a lot of stock being put in the Ethereum blockchain, as we've seen, even just with the Ripple and SEC case. We know the SEC has been protecting Ethereum for years now. All of us in the XRP community scratching our heads wondering why, but now we may actually have some more evidence. Another story here, the DAO hack, which would certainly implicate the SEC with these connections that we've recently found, courtesy of Tag XRP here on Twitter. And so if this does come out in the wash, is this just going to be another strike against the SEC in the judge's eyes? Of course, we are still waiting for a verdict from the judge, and I think all this helps, guys. I seriously do think, the more we expose the SEC, the more that's out there, I think the more traction it'll get. I think, more media outlets like, a great example is just Charles Gasparino and Eleanor Turret bringing this to Fox Business and, for example, questioning Gary Gensler when he's on Fox Business, even though Gary clearly doesn't want to answer. But this is just another example, guys. This is all coming from the XRP community. We are doing the research, we're getting the information out there, and it's likely, very likely, that Gary Gensler knows that we are at the bottom of this. So why would it be so far-fetched to think Judge Torres isn't privy to this information that is coming out daily against the SEC, so maybe a Dow hack investigation will be next on the chopping block, will be the next one in line for the SEC.
So enjoy your day, everybody. I'm always here for you. Leave any comments or questions below, and be sure to subscribe. But thanks, everybody. I really appreciate you. Enjoy your day, and I always have your back. So thanks so much, everybody.